Mish into this conversation because this market rally is broadening.
Okay. Mish Snyder, CEO of Market Gauge. Mish, he's been off for 3 days, okay? So 3 days of market enthusiasm talking is exploding right before your eyes. So I saw you in the background. I saw you with a big smile on your face. And good morning. Always great to have you on. And the lifeblood of this market is rotation. We talk about it. You like the Modern Family. It breaks things down. We can go into that in more detail. But Mish, welcome to the show. Thanks for joining us.
Thank you. Thank you. It's great to be here. And Dennis, I'm happy to see that you're feeling right up back to yourself.
Yeah, I come back hot. Wound up. Mish, awesome to see you as well. I mean, I've been talking about this market rally broadening out here, and I think you're seeing some of the same stuff here now because obviously, this whole rally has been driven by tech, and everything else is kind of lagged. But that's not the case anymore here, Mish. What are you seeing?
Well, it's so interesting to see the small caps.
Yeah.
That, basically emerge from the dead. And retail, my granny retail, right? Joe, we've talked about granny retail as the indicator for the market. And in spite of everything, even though still super far from the all-time high, 104, by the way, was the all-time high in 2021, and it's trading at around 86. So we still have a long way to go to say the consumer is completely in charge again of the U.S. economy. But it doesn't really matter because all we really need to see is that something that might be an overall weak link doesn't become an anchor. I mean, that's been my big theme right now, is that it doesn't matter what happens in the market. You have to always watch the weak link, but the weak link doesn't necessarily mean bearish unless it really starts to bottom out, like drop like an anchor. And we haven't seen anything like that. So right now, retail's good, small caps. So what does this mean? I mean, from a fundamental standpoint, it means that things are optimistic about the reshoring. Everything about small caps is in the U.S., right? The U.S. inside sectors, manufacturing, industrial areas, companies that are made in America, produced in America, manufacture in America, make American goods. These are where the optimism is going forward. But even small caps aren't at all-time highs. They are only about 3 or 4% away.
We're getting there.
They're getting there, right? So, there's always the wall of worry, but right now you can't fight the momentum. And it's been a fun market to trade because basically you just get on the tail of anything that's moving. You could trade it actively. If you're into something and it ain't working, just get out and just stick with the things that are moving. I mean, I can't believe that after 40 years of trading, it's that simple, but really it kind of is right now.
Bull markets make it simple, Mish. And I mean, we've obviously been through a lot of different types of markets, but when you've got everything just going up, it's like, we remember Portnoy back in 2020 at his dartboard, and he was just throwing darts at random letters. He's like, this is how you make money in the stock market. Get out your dartboard and you throw 3 darts and you take the 3 letters and you go buy that stock. And you know what? It works. And I mean, we're back in that market to a certain extent here again, where everything is just working.
I'm sorry to interrupt you, but I don't want to forget because it's still, for me, like 6:40 in the morning. You said something. So what is the one thing that could stop this trade? You said it before.
I'm trying to find it right now. Geopolitical risk, higher interest rates. No.
Go broader than that. Inflation.
Oh, inflation, yeah.
And not stagflation, because that doesn't even seem to matter right now, because the stag part people think isn't going to hang out too long. That stag will turn into
transitory,
more growth. But it's going to be hyperinflation potential. And I'm not saying it's there, but I'm just saying that is the one thing that I can see that stops this train. So that's why I talk about that trifecta. You know me, I love expressions, Modern Family, trifecta, all energy, hands on deck, vanity trade. And the reason why I come up with all these expressions is not to sound clever. It's to keep my mind compartmentalized so that I know what to focus on. Otherwise, you could be like totally ADD across the board and trying to buy everything. And that's not a good formula either. So let's go back. Trifecta, right? So what is my trifecta of inflation? Number one is always going to be the relationship between gold and silver, the ratio. And right now, gold is rocking and so is silver. So we're not really seeing a flip where silver starts to really seriously outperform. It certainly has come off from the highs. Last I checked, and this may not even be 100% accurate, but it was around 86, that ratio. You know, if it starts to drop below 80 or below 75, you know, now we're talking 1979 type inflation in terms of the metals. Not happening yet, but still, how could you think that silver around 39 and gold right now looking like it's about to get to new all-time highs isn't somewhat concerning? Second is the dollar, right? So right now the dollar, everybody thought the dollar was going to go back up. No, the dollar is doing exactly the opposite. But is it critical? No, it's still hanging out, you know, over 97 in the DXY, something to watch. And the third, I know people always look at me like I'm kind of weird when I say this, but I believe in it so wholeheartedly, and that's the price of sugar, more than the fact that coffee's up 30% or cattle's on new all-time high or cocoa is going back up or soybeans or corn or wheat might be bottoming out. That matters, but sugar matters the most because it is a product in everything. It is a product that represents social unrest when people are going for things that are sugary because they can't afford to eat other things. It represents geopolitical stress because it's grown overseas. There's been hoarding of it. And right now, it's trading on the cash about 16.48 last I looked. It gets over 17 cents. And you're looking at cane here. Cane would probably be around 11.15. You know, that starts to look interesting. So the bottom line is we see the signs. And markets can go up together, commodities and stocks, but it's when one starts to really go nuts. And we haven't seen that yet, but my eyes are always there.
What about oil? Because we're starting to stabilize here too. And this is another thing that people notice first. When oil prices start going up, they notice it at the pumps right away. And then that starts to, you know, get people concerned. Like right now, so, you know, if your gas prices start ticking up, we just had Trump saying that, you know, gas prices are down 50% since he took office, which obviously is not true. But, you know, he says it there and, you know, lots of people believe that. Thoughts here on oil, because we are starting to stabilize here a little bit. Do you think oil starts to move higher?
Well, you know, so I was going to just bring up the other thing that you said before I came on the show about, you know, basically Trump gets whatever he wants, which is why we know interest rates are going lower. That was my other expression, by the way. The unloved becomes the love, meaning bonds. You know, all of a sudden we could see that the long bonds, especially is what I like to watch, the TLTs, have the potential to show that we're going to see much lower yields at some point. And oil is the other thing that he keeps talking about. It's going lower, and it's not. So essentially, what I did a little digging, when he went over to Saudi Arabia, basically from what I've gathered through the grapevine, you know, what the hell do I know? I just sit here like you guys listening. But still, the point is that supposedly it's the Saudis that are going to keep pumping to help the price of oil go down, which is why he went there and, you know, had all the wonderful time, got the jet, all that other stuff. And I think that's kind of like on one of my shoulders here is that at what point, if oil goes up, did the Saudis start unleashing? But beside that, we know I live in the state of the Permian Basin, part of it, right? It's New Mexico and Texas. And they're not drilling. They're not the shale Permian Basin is kind of like stopped because nobody wants to drill under $64 a barrel. And that's the smaller companies. The bigger companies under 60 certainly don't want to. So this call for $50 a barrel to me sounds unrealistic unless the oil gets flooded from somewhere else other than the United States. And that's number one. So I actually am watching the $64 level in WTI as a very interesting place. If that holds and then it goes through 68, I think things could get out of control. It's a heavily shorted market. That's number one. Number two is that the all energy hands on deck. I mean, right now, natural gas is probably more of an interest to me than even oil. because that thing is so darn cheap. And yet
Yeah.
I love uranium. Shit. I mean, excuse me. I can't believe I just
Oh, Money Mitch won't like that. He gets his crap. I swear every once in a while. He's like, the YouTube algo. Josh will fix that later.
She'll pay the fine.
But the point is this. We cannot fuel all this AI and data centers. I mean, I know I'm saying things that people have been saying for a while, but I've been saying this for a long time too. With nuclear yet, and coal is hot too. And even though Trump is against solar and wind, solar, I was in solar, I kind of like just scratch because I don't want to, exactly what I said in the very beginning. If I'm not making money right away, I just get out. I'm patient. I can actively trade as much as I want. But I'm watching the solar area. And the wind, forget it, I'm not really all that interested because he's obviously been so against the wind. But natural gas is the thing. And we're big producers of natural gas. And at $2.85 right now is so cheap. So I'm waiting for it to get through $2.90. And then I'm looking at, I was long Boyle. I got out. I keep probing. I decided I'm not going to trade UNG. I'd rather trade Boyle right now. And Boyle gapped up higher yesterday. I want to watch to see what happens with the future prices. Because if they come in and can get a close over 290, I'll get right back into Boyle. I still think that that's so undervalued. And again, are we talking inflationary areas? No. But, all of this sort of helps. And the Fed saying, oh, okay, 3%, maybe that's our new target for inflation. I also thought was interesting. So yeah, you put that all together along with copper and silver and steel and everything else. And now DBA, which is the agriculturals, also starting to get a little hot. Put up DBA.
Yeah.
Look at that. Does that look disinflationary to you? No. Does that look recessionary to you? No. So there's a fine line between what happens when everybody wanting commodity prices to come down, that looks recessionary. You want commodity prices to rise because that's economic growth. And then all of a sudden commodity prices start to rise too much. And that's where you have inflation.
All right. Long before Michael Berry was talking about the vanity trade, someone on Pre-Market Prep was talking about the vanity trade here. So we've had some moves. I think Estee Lauder, one of them, I think Elf had a big day.
Elf had a big day yesterday. Ulta. I mean, Joel, Dennis, we were talking about Ulta when it was trading at like $350 a share. Ulta, look at it. I mean, I think it also reported this week. Did it report yesterday or not?
It's reporting actually tonight.
So look at 530. I mean, anybody who listened to our show and bought Ulta or even Elf after it reported and sank and then immediately popped right up. And then some of the other ones that I talked about. We talked about Nu Skin. Do you remember that? That was at like 7, 8. It's over 12 now. That's a decent move, right? Stitch Fix. We talked about that when it was
You did.
It's now at 550. What else am I in from the vanity trade? I'm also looking at so outside of that, but I'm looking at Hims right now because Eli Lilly obviously also is doing great. I'm still watching Novo Nordisk. I mean, these companies aren't going away, but Hims is the hot Twitter stock, right? You're going to get everybody when Hims goes up.
Oh, they love it.
They love it. This is what I'm learning. I'm like, Mish, don't be stupid. Why buy Novo Nordisk and wait for it to hit 60 when it's trading at 55 when you can buy Hims at 45, 46 if it starts to break out, and it'll be 60 in a day. So I'm watching this. So 45, 46. But the bigger point is what Joel's saying, which is the vanity trade. I cannot stress it enough. Everybody I talk to either is on some form of a diet drug or, whether they're on Wegovy or they're on Mounjaro or they're on Zepbound, whatever it is, they're on it or they know somebody on it and it's changing all their buying habits. That's why they're buying beauty stocks. That's why they're buying supplements like Nu Skin. That's why they're buying AbbVie all of a sudden looks like
What about Lululemon? Could they be getting into their yoga pants?
Well, except that who wants to buy $100 yoga pants?
That's the problem. That's the problem.
Every time I
It's
say
like
that,
they're too expensive.
but still, that chart doesn't look bad. But I wouldn't touch Lulu. But look at Urban Outfitters. Put up URBN.
Okay.
Oh, let's come back a long ways.
Yep.
Retail.
Look at that. A little bit different. That's where they're buying their athletic wear from, right there.
Oh,
Yeah, that's
discount athletic wear.
exactly.
Yep.
So, and then look at like Planet Fitness, PLNT. You know, so because this is a whole new generation, and if these diet drugs get cheaper, which of course, you know, that was the big announcement by Eli Lilly that they were lowering the price, I think, to $4.99 a month. You know, obviously Viking Therapeutics had a disaster with the pill, but that doesn't mean I would discount that in the future. That will happen. But look, did we just put up Planet Fitness? All these stocks look poised because the thinner America and globally hasn't even really hit that GDP that you said was useless. You're right, it is. But nonetheless, I have read that 6% of the GDP could be added just from the consumer that is now has a new life. Put up Match.com and Bumble. You know, people have argued with me like, oh, those social apps are dead for dating. Nobody dates anymore. Nobody uses those apps. I say BS, because if you are actually in a situation, put up Match looks better, yeah.
Match looks
Okay.
better. We don't like a Bumble.
Yep.
I'm not
The
in
girls choose on that one.
Well, Match reported well, but the point is that if you have been home basically trying to hide yourself, and now you want to come out because you're thinner and you feel better about yourself, just watch those commercials. I see them all the time. I watch Hulu because I'm like, you know, I start binging some shows on Hulu. Mostly, though, I'm interested always in the commercials. Now you have Serena Williams doing,
Yeah.
yeah, right. I just lost 31 pounds. You know, I feel so much better. You know, this is the kind of thing that you have to keep an eye on. Now, she's obviously not interested in dating, but you know what I'm saying. Just talk to anybody you know that has been taking the diet drugs and ask them, how has your consumerism changed? What are you doing now that you didn't do before? And what are you not doing that? Are you buying fast food? Probably not, right? Are you buying a lot of alcohol? Probably not. Are you hoping for cannabis to be legal? Definitely, everybody is.
Maybe McDonald's is our short. Maybe we should go and look at McDonald's. I mean, the stock's near the highs here.
You always
Kind of
want to
expensive.
go at
P's
McDonald's.
26 times.
Well,
Maybe
look
we
at
should be thinking about selling our McDonald's.
Well, here's the thing is what you're going to find, and this is already happening too, is that a lot of these big box food companies like McDonald's are trying to gear products towards the people on the diet drugs. So they're offering like low carb stuff or, you know, things
Yeah, they're smart.
muscle.
McDonald's people are too smart.
Right. These marketers, they know what's up. They know what's up. They know they're going to lose.
Okay,
a low-calorie Big Mac.
Mish, before we let you go, I know you're working on a new project. We had a nice chat yesterday, and we all know about the Modern Family, and Mish is doing something different with the Modern Family. She's putting, and we don't have time to go into all the different people here, and there's some great characters here. But she's working on a project to bring the markets to everybody, like really on a different level, a comedic level, right? And besides her talents in the markets, she's a very talented comedian and a very funny person. So I'm going to throw you on the spot here, okay? And I'm going to go to Granny Retail, right, who loves to go to the mall. This one right here. What is Granny? Did you see the Burlington earnings?
Yeah.
What? Give me your Granny voice. What is Granny saying today about the Burlington earnings?
Well, first of all, let me just say quickly that I have a guy I'm working with now who is in the film and movie industry who's going to be creating AI cartoons out of these. So you can now take my characters and you can animate them using AI. So like, yay, AI, right? So that's number one. Number two is what we're planning to do is do short clips, a lot of the different characters where they have a voice that I've created also that can then be generated AI, and give like 60-second kind of like,
Super Bowl.
hey, Annie, I'm standing at Burlington, oh my God, they just reported really well. And I just want you to know that I'm heading in there. I'm going to throw my cane away. Here's a chart and here's why, the blah, 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 whatever the reason is. And I think here's the chart. I think this is really where I think maybe I would even invest in the stock. That kind of thing. Quick little hits that show the characters moving in the store. We're just starting with this. We haven't finished yet, but the point is to be educational, obviously entertaining, and also to have a way for people to, again, compartmentalize the different important sectors of the market. So that's
important. And the bottom, she's got some good characters here. We've gone over time with Mish Schneider, CEO of Market Gauge. Great. This is a fantastic segment. We'll have Josh send that clip over to you. We really appreciate it. We'll be talking real soon, Mish. Thank you very much.
Bye, fellas. Have a great day.
Thanks, Mish.
Great energy. That's what we have here. On top of Triple D's energy, we have energy from Mish Schneider, CEO of Market Gauge. Great follow on Twitter at Market Minute.